Hi there. If you think that now is the time to buy Alibaba stock, you might be right. As you can see, the stock price in the last month has increased by over 25%. They also reported the results for the first quarter Q1 2024, and as you can see, they reported a decline in their earnings over 96%. During that day, the stock price has declined by 6%, but then it has rebounded and is expected to increase even more in the future. As you can see, pre-market the stock price is expected to increase by over 1.7%. Now, as you probably know, I own this company. I've been buying all the way down, especially at the bottom. And now my position is green. Let me explain why I believe that Alibaba is still a great investment, despite this massive decline in their earnings, over 96%. If you look at their real earnings, you will see that their decline wasn't that high. You can look at income from operations, and you see just a small decline of about 3%. Of course, if you analyze this company even deeper, you look at what the management said, what they're planning, then you will see that this decrease in their income from operations was a good one, because they took their earnings and invested in other projects to increase the revenue even more in the future for their segments, especially cloud computing, Taobao, their e-commerce channel, and also international, especially international. And when you look at the revenue, you can see that it has increased by 8%. So, this massive decline in their earnings, over 96%, happened because of their investments in public companies. And when the stock price of those companies, of those stocks, goes down, they have to report that loss. Even though Alibaba didn't sell those stocks. It's like you invested in Alibaba last year and you have a loss about 25%. And you as a public company, you have to report that loss. But you didn't sell that stock, that business. You still own it. So according to accounting rule, you have to report the loss, even though you didn't have it. And that's why they reported this decline in their interest and investment income. And you see a huge decline in their earnings, over 96%. However, when the portfolio of Alibaba with stocks will rebound, then they'll report an even higher profit. And their earnings next quarter or maybe next year may be an increase over 100%. So when you look at Alibaba, don't focus on their net income, their final net income, because they own other public companies and their earnings will fluctuate over time. It's better to look at the income from operations. Now, if you listen to the earnings call, you find out that this company is rebounding, especially their cloud division, the cloud segment, and e-commerce channel are expected to increase their revenue even more to report a double-digit growth in the second half of 2024. And that would be great. If they can achieve that, believe me that the stock price will go up a lot, over $100 per share. It might reach $200 if that happens. The other segments, as you can see, Alibaba International, their international commerce reported an amazing growth rate, over 45%, and also Sinel. Those two segments, you can look at them as being one, because their international e-commerce depends on Sinel to deliver the goods, the products. Then, you look at local services, an amazing growth rate, about 19%. As China is rebounding, many Chinese stocks are going up, including Tencent, JD, Alibaba, and PDD Holdings. So this year may be for Chinese stocks. Now, besides this, you look at every segment, you see that it's growing, and they're planning to improve their growth rate. They also announced a dividend, about $1 per share, plus a one-time extra dividend, which is around 66 cents per share, per ADS. So your dividend for this year is expected to be about 2%. Of course, it also depends what price you pay for Alibaba stock. Now the dividend yield is about 2.3%, but as the stock price keep rising, the dividend will get lower. Now, you have this dividend, as you've seen, about 2.3%, plus, as you can see here, buybacks. They had a net reduction in the total shares outstanding over 5% in the last 12 months, ended in March 31st, 2024. And they still have more cash available to do even more buybacks. As the stock price is so cheap, and if Alibaba continues to do more buybacks, then your return will be even higher than this dividend, about 2.3%, plus a reduction in the number of shares of 5%, you have a dividend about 7%. That's amazing. And as I said, this business keeps growing, as you can see here. The segments are expected to improve, especially e-commerce China and cloud group. Those segments are expected to report a higher growth rate in the second part of this year, 2024. And their other segments are expected to keep growing. You might see lower earnings in the short term, but in the long term, this business will deliver higher earnings. They have the management in place, the right strategy, and they focus on the user experience, their clients, their final clients. As long as they keep pushing, they implement their strategies, this business is likely to do well in the future. And as the valuation is so low at the current level, your upside can be quite huge. Of course, don't expect a 10x in the next 2 years, but you can easily have a double from the current level of $86. The stock price may reach $200. So, if you like this company, then you can take advantage. But of course, you also have to look at the risk. Because, as I said, those two segments are expected to improve their growth rate. But maybe that won't happen. And if they continue to report a slow growth rate, then the stock price will remain flat or decrease even more. You also have to be aware of that risk. And of course, other Chinese regulations. Maybe the Chinese Communist Party will implement new rules which can affect Alibaba businesses. That's why you have to be aware. And about the trade war between the US and China, I don't think that is a high risk. Because if you look at Alibaba International, especially AliExpress, they are focusing more on Europe and other emerging markets, such as Brazil or Latin America and Asia. They don't invest a lot in the US. They don't focus on their market because they know that they may face other problems, especially from the US government, new regulations, and of course competition from Amazon. They can afford to invest a lot of money in the US and compete with Amazon. They have no chance. So they are following the right strategies. This is my opinion. And I believe that the revenue will increase, maybe not in the second half of this year, but in the next years, the revenue will increase for sure. And their income will improve over time, especially as all Chinese stocks are rebounding. Next quarter, or maybe in the second half, their final net income may be an increase over 100%. Because as I said, Alibaba owns other public companies. And when those stocks will go up with all Chinese companies, they have to report an increase in their income, which can be higher than 10 billion RMB. Last quarter they reported a loss because all stocks went down, all Chinese stocks went down. So their final net income may be an increase over 100% in the second half of this year. So the business is doing great. They are planning to improve their China e-commerce and cloud group. They've done a lot of buybacks. Plus, you also get a nice dividend at the current valuation, a growth stock, about 2.3%. So this would be quite great. But of course, as I said, there is also a risk. If you are afraid of China or other bad things, then don't invest in this company. Because when you hear bad news or new regulations, you'll panic and you will sell the stock at the wrong time. So don't invest in this company if you can't hold it for a longer period, 2 to 5 years or even more. So that's it for this video, and if you have other questions, then let me know in the comments.